Probably not surprising to most of you here in the room, but we're experiencing a tremendous surge in cross-border M&A volume this year. It appears that this will be a record-breaking year, and we do not anticipate this momentum to slow going forward. The emerging markets are playing such a significant role in the development of cross-border M&A, and so we thought it most fitting to kick off our Stalwarts Roundtable series with a group who will talk just about that. To begin this session, however, I would like to introduce an individual who has been witness to the evolution of the emerging and established market convergence for many years, and one that has played a role in the development of an emerging country, Brazil, and has been counsel to Brazilians, to Americans, and most recently in his current role to the United Kingdom. Please join me in welcoming His Excellency Roberto Jaguaribe, the Ambassador of Brazil to the United Kingdom. Thank you.
Well, good morning, and thank you very much. Thank you for the organizers. This is a very interesting and important event. I'm here to talk a little about Brazil, but first I think it's important to witness the fact and to recognize the fact that one of the major changing elements of the very dynamic world that you have today, since about 25, 30 years ago, has been the rise of a number of emerging countries. And this has changed dramatically the global scenario. These emerging countries, of course, the most significant of which is China, have already been contributing much more to the growth of the world economy than the G7 economies since 2003, actually. And this is a trend that is not going to go away in spite of the fact that today are witnessing a number of setbacks in some of these economies, including my own country, Brazil. Another very particular characteristic of this situation is the fact that these new relevant actors have become relevant actors, but are still developing countries. And this is something that is a novelty as well. They face the challenges and the difficulties of development, which were not usually associated with central actors in the global scenario. But they have, to a very large extent, ceased to be what they used to be, which is peripheral countries. They have become inserted in the global process of communications, of trade, of investments. And what is more important for countries like Brazil is that a new network has been established that does not necessarily go through the central traditional industrial economies. In the case of Brazil, for instance, 20 years ago, our trade was 70% with OECD countries. Today, it's almost 70% with the non-OECD countries of that time. So there is a major trend which has to be recognized and which is very important in this scenario. Another characteristic is that this is making governance at a global level more complicated, both at the political and economic conversations because of the emergence of these countries. At the same time, these countries have a continuous potential for growth, which is probably larger than those who are already established economies. Of course, you can always say that affluence is not as high as an incentive for growth as poverty is. And this, of course, is one of the reasons that is driving these economies toward this situation. In the case of Brazil, we have reached a level of maturity over the past 20 years that is driving the country forward on the basis of the accumulation of good practices. As you probably know, we are undergoing one of the most, let's say, volatile and close elections of the past many decades in Brazil. The final round comes on this Sunday. We cannot say at this stage who is going to win. There's no clear favorite. But one thing is certain. In spite of the fact that it has been a very acrimonious debate internally, the results of the elections are not going to affect a number of very clear facts that are already very important in Brazil. First is macroeconomic stability, a conquest that was made by President Fernando Henrique Cardoso in his time as Minister of Finance and consolidated over the past 20 years. We have at this stage a high level of inflation, but always within the target rate of the central bank. The second is obviously democracy, a process that was reintroduced to Brazil 25 years ago and has been continuously consolidated. And finally, a new idea which is taking place and is fundamental in most developing countries and certainly in Latin America, which is social inclusion and social integration. All of these elements are really non-contentious anymore. They have become basic official policy, not just for governments, but it's something that the country aspires and is not going to lose. Brazil, on the other hand, is undergoing a little change in its economic growth pattern. The model that was very successful of social inclusion also generated a very important pattern of growth during the past probably 8 years. To a certain extent, this model is exhausted. Brazil is in a process of changing into a more investment-based process of growth. The slowdown has been considerable this year. We're expecting growth of less than 1%. But we are shifting this model with additional supply-side initiatives that are beginning to show some results. First and foremost, and of importance in this scenario and in this context here, is the fact that we are creating enormously important opportunities for investment in Brazil, especially in infrastructure, which over the past many decades has been neglected to a certain extent and have become a significant obstacle to continuous productivity and growth in Brazil. We have also the process of social inclusion generates enormous opportunity for investment in new areas, which were not traditional for investment, especially FDI in Brazil, which are education and health. And I must say that the UK has taken a leading role in this respect, and new investment in this area, which are very significant. The fact that Brazil has a slowdown temporarily in its economy does not impede the middle class from growing at much higher levels of demand in a number of specific sectors. But the infrastructure element, I think, is the most important for foreign investment. We have created enormous new concessions, which are beginning to be put on auction. And we have different areas of investments in energy, airports, transportation in general, communication, and the development of the new pre-salt area, which, as you know, has already been producing about 600,000 of barrels of oil a day, and we expect this production to grow to about 3 million barrels a day from the pre-salt area by the end of the decade. British Gas alone expects its production in Brazil to be around 600,000 barrels of gas by the end of this decade, that is by 2020. Brazil has traditionally been a very friendly country to foreign investment. We have been receiving continuously significant amounts. Over the past 5 years, Brazil has always been amongst the 5 leading recipients of foreign direct investments in the world. And we continue to expect that this situation is going to be maintained. So what I wanted to suggest to you is that in this context, the scenario in the developing of the emerging economies is very significant in spite of the setback. There are many elements of potential for growth in Brazil that have not yet been adequately tapped. And we think that this is an opportunity that should not be overlooked. I just wanted to place this as an introduction of how Brazil is situated today. Thank you very much.
Thank you for that introduction. I'd now like to invite the panel to to assemble here on stage with me, led by Robin Johnson, who's the partner and chair of cross-border and international M&A at Eversheds. Andrew Huntley, the co-founder, senior managing director of BDA. Mario Garnero will join us again, the founder and chairman of the board for Brazil Invest. And Sal Vedavipalli, the chairman of the Partners Council and the head of global fundraising for the Abraj Group.
Right, thank you very much, David, for that. We've had some very interesting speakers already. This is obviously a different format, so hopefully it will work going forward. So we've managed to get people to talk about Africa, to talk about Latin America, and to talk about Asia. So I think we are covering most of the globe in this session. If I may start with you, Andrew Maybury, what are you seeing in terms of Asia and into Europe and Europe into Asia?
I mean, Asia's a big place. If I can make one summary comment, it's that overall we see a gradually and steadily increasing flow of acquisitions from Asia westbound, whether that's into Europe or into North America. But they're driven by very different things around Asia. So if I just sort of dial around the region in no particular order, Robin, starting perhaps with Japan, who's been at it the longest. We see a steady continued flow of outbound M&A from Japanese, driven mainly by large Japanese corporates. And it's primarily, if you'd asked me this 2 years ago, I might have said, well, the yen is very strong. This is what's supporting a lot of opportunity for the Japanese to go outbound. Funnily enough, in the last couple of years, as the yen has softened from high 70s down to over 100 to the dollar, we haven't seen a drop-off. So what's much clearer is that it's simply driven by this hunt for growth, any growth that exceeds the continued, rather lackluster performance of the Japanese economy itself. In the other direction, of course, inbound acquisitions, M&A to Japan remains difficult. It's almost a locked door. And it's one that you can beat against for many years, but it rarely opens more than a crack. So I think we'll see that continue from Japan, although, of course, the Japanese are looking very much into emerging markets as well as developed markets. A lot of interest into Southeast Asia, huge interest at the moment into India, driven by this kind of love fest that goes on between the two leaders of Japan and India. So that will go on. China, I think, of course, is the big story. We've heard from people like Patrick Zhong. I'm sure the topic will come up again. There's a steady drumbeat of growing outbound M&A from China. I think in 5 years, we'll look back and we'll be surprised by how far that's gone. It's still challenging. Everyone knows about it. It's in the papers. It's talked about a lot. A few, I guess, highlights. We see private companies joining the state-owned enterprises in going outbound to acquire companies in Europe. And actually, I think there's a slight preference for Europe over North America because of concerns about political sensitivity in the US and the role of organizations like CFIUS. We see the days when there was a lot of uneducated approach to valuations gradually receding when it comes to Chinese buyers. And the challenges more are now about process, speed, timing, ability to execute, rather than wildly divergent valuation expectations. We also see, I think, an ongoing trend in the other direction. There's still a lot of activity for inbound to China from Europe, although the stats will tell you that the number of transactions has slightly dropped. The size of transaction has been increasing on the inbound. We could talk all day about China. India, I think, has been rather bruised by the state of the economy in India recently. There's been very little outbound acquisitions by the Indians in the last few years. We may begin to see that recover. There's some very encouraging signs domestically with the new government, a lot of changes in policy reform, a lot of activities that are actions by the government that are helping domestic business. I worry that we may see a return of some of the hubris, which seems to be prevalent in India whenever markets start going in the right direction. We're already seeing very frothy equity markets within India, valuations starting to go up. And often in M&A, valuation expectations by the sellers get well ahead of the curve in India. Tends to be the other way around when the other side of the table. But I think we may see a gradual return, a more cautious return to outbound M&A from India. And I suppose the other one worth mentioning is Korea, where there's probably a couple of factors driving Korean companies to go outbound. One is this search for technology to feed the big Korean players who are competing globally with global heavyweights. So I'm thinking of, the Samsungs versus Apple, the Hyundai Motors versus Toyota or Volkswagen, and this huge base of Korean suppliers that they have domestically are driven to go out and find ways to continue to be competitive to supply these fast advancing giants. So that's one thing. The other thing is government policy. The government in Korea has realized that they face similar challenges to Japan in terms of demographics and cost. And they're a much smaller economy. They need to go outbound. They need to diversify. Their mid-sized companies need to do that. And so I think we will see, they're cautious, but I think we'll see more from Korea in this economy in Europe in terms of outbound M&A.
Thank you, Andrew. Seth, what about Africa?
Yes, and I think it's interesting hearing Andrew's views in Asia. What we are seeing in Africa was pre-financial crisis. You had just over 1,000 M&A in a year, and post the financial crisis that dropped, and today we are back up again to that level. The change between pre and post is pre was mostly inbound from outside Africa coming into Africa for acquisition. What we are seeing now is cross-border transaction within Africa, within African companies acquiring other African businesses by region or by pan-region, in essence building scale. Simultaneously, we are seeing a number of Japanese companies and Korean companies are now making inroads into Africa. The challenge that a lot of them face is that information is not readily available, and the counterparty risk is high in Africa. Although the opportunity is high, it's sort of a chicken and egg situation where finding the right party to do business with, because acquiring a business, a foreign business to acquire a business in Africa is still quite tough. You need to find local partners. South African businesses generally do not go out on their own to the rest of Africa, simply for those reasons, and they're part of the African continent. So let alone the Japanese and the Koreans are having the same issues. But having said all of that, what we are expecting over the next 3, 4, 5 year period is quite a bit of activity in sub-Saharan Africa. We're expecting large sums of capital to be raised by private equity houses. We are obviously one of them. And we are also seeing quite a number of businesses of scale of even on international standard basis. And Nigeria is a key market that is playing a big role in it, in all of that. And then you have another event that is happening is the deregulation of the pension funds. So you're having a lot more capital, local domestic capital, also being unlocked. So for example, last year, the biggest investor in sub-Saharan Africa was South Africans, not China. China came second. So there's quite a change that's happening, and it's a moving target.
So quite positive news on Asia and Africa. What about Latin America?
I think that the countries that apparently, when we were for a long time talking about Latin America, including Mexico, that you could include on that, there's some countries that were out of the radar and they are doing very well today. Bolivia, Paraguay, Peru, Colombia are countries that are having around 6 to 7% growth Chinese way without having any repercussion on that. Oh, I'm sorry. Okay, good. So in Brazil, that used to be the locomotive, was a little bit behind on that. But I think that there is a sense in Latin America about the business. And the amount of M&A, let's take back to Brazil, that's going on is very important. And the opportunities that are just, an ambassador put very well on the oil industry. This was something that for about 15 years ago was almost stable there. Brazil was just going. Suddenly, with the pre-salt, it comes up to 2 million, 3 million barrels a day. What requires a consolidation of services, the industry of services in the oil industries all over Brazil. So the amount of M&A in Latin America is growing, even because you are considering that people investing from Colombia into Brazil. Brazil is starting to have an interdependence within Latin America, even Mexico on that. But the consolidation of several industries on the agriculture, on services, and specifically on the infrastructure in Brazil, that's a program for $200 billion, will be leading the country to have a very important inflow of monies and consequently a very important development of M&A opportunities.
Okay. In terms of financing, Sev, in Africa, are there any particular techniques out there? Is it debt? Is it equity? Are you seeing all the money up front? Are you seeing joint ventures? How do you see African financing in M&A?
Well, certainly not all the money up front.
Yeah.
What we are seeing is that debt is hard to find. Now, it all depends on the size of transactions. So that beyond a certain point, I would say about $100 million US, you cannot raise that kind of capital from the domestic market. You'd have to go outside Africa. But predominantly the leverage is not huge. It's, I would say, 50% of the acquisition cost where I would have seen the most in terms of leverage. So a significant portion of it is equity, which comes back to that point is in order to do the M&A in sub-Saharan Africa, although the companies African companies are ready to do those acquisitions, but they can't do it on their own. They need international funds to come alongside them to complete those transactions.
And so, and those funds will be by way of private equity investment, or will they be joint ventures? Or
predominantly private equity funds in most cases. Now you've had, for example, Carlyle, who has opened a dedicated Africa fund recently. Blackstone has done a deal in Ethiopia. There's a $200 million deal. KKR is also in Africa. I know TPG is also have hired people now to set up a fund in Africa. So it's taking momentum in terms of capital. But the underlying point, unlike India and China and Brazil for that matter, when those markets came up, a lot of international capital went in very quickly, simply because it had domestic capability to implement. That's not the case in Africa. Africa doesn't have that depth yet. Yeah. So the impediment to that capital going into those transactions is going to be implementation capability on the transaction itself.
Are there not? Am I allowed to ask
a
question?
Please, please.
Oh, good. Are there not domestic African private equity funds, albeit perhaps raising funds from outside Africa, who are local managers?
Yes, absolutely, Andrew. There is about 200 GPs or fund private equity managers in Africa today. There's only a handful who have funds above $500 million. Not many.
Yeah.
So hence, it's limited in terms of pool of capital that's available. But what is interesting is now, for example, the Government Pension Fund of South Africa, which is managed by PIC, they have $200 billion it's pretty large. So they have taken a decision about 5 years ago that South Africa's future is not about investing in South Africa or outside in Europe or US. It's all about the rest of the continent. So their future is tied at the hip with the rest of the subcontinent, hence they're deploying significant capital into the rest of sub-Saharan Africa.
Are you seeing more sophistication in terms of financing from Asia than historically has been the case?
Coming into developed markets, into Europe? I think so, yes. I mean, I think as the volume of outbound acquisitions grow and the players diversify, then the sourcing and structure of financing also changes with that. So obviously, large state-owned outbound acquisitions driven by things like resources, which were all flavor of the day a few years ago, were primarily bankrolled by the government. Even with state-owned enterprises, so even with private enterprises, but certainly with state-owned enterprises going outbound, China has policy banks which will lend to support investments overseas. So Chinese companies do have access domestically to capital, which they can deploy in outbound acquisitions. Of course, the stock markets, the equity markets had been very strong a few years back, have weakened, but we're gradually seeing a return to the equity markets for companies to raise capital at valuations which are certainly attractive in comparison to what they might be paying overseas for acquisitions. But we're also seeing a couple of other interesting things, like Chinese companies partnering with private equity firms in making acquisitions overseas. I would say typically with private equity firms closer to home, so Chinese private equity firms who are partnering with strategics and going outbound. And some of those private equity firms have sort of added it to their list of sort of key strategic goals, is to themselves put money outside China, partnered with a strategic, as they find it increasingly competitive to find deals at home. Remembering, of course, that in these statistics, we talk about outbound, inbound. Domestic Chinese M&A is really what's boomed. I mean, the domestic M&A statistics are way ahead, in deals. So they're looking outbound as well for opportunities. And finally, I think we've begun to see Chinese companies, when they're looking at an acquisition, actually consider local financing, sometimes even on a kind of non-recourse local basis, which is not typical for a corporate, because there are some restrictions there still are some restrictions to the outbound exercise of Chinese acquisitions, which sometimes motivate them to find a certain amount of financing locally from local banks wherever in France, Germany, UK, etc. So I think there's a diversification. There's still a somewhat limited range of financing options that the Chinese have when going outbound, but I think we'll see a further expansion of those.
Okay, thank you. His Excellency mentioned about deregulation in Latin America, and one of the things that I see on a number of the deals that I'm involved with is the obstacles that can get created through regulation. What are you seeing in Latin America, a trend towards deregulation, or do you still see that regulation can hold deals up, complicate deals?
I agree with you, Robin. I think that the most important on that is how the business community creates the opportunity to put pressure on the government. The government is static all over the world. So they have to react when you have a reality of facts that are going on. So I think that the improvement and what Andrew told about China, for instance, Brazil and China today, China has overplayed the States in terms of investments and trade. But China has a fund from the government from $100 billion just to invest outside, because on the last quinquennial project was the soft power of China. And the soft power in China was understood how our fortune is made of buying market technology and the political influence through the companies that are there. The Brazilian companies are not yet and Brazilians in general are not yet seeing this as a sort of an enhancing outside, but mainly for one reason, because the opportunities for investing in Brazil are offering margins that much substantially higher than the other countries. I used to run a NEC. We were controlling NEC. We made in Brazil margins of 20%, and Japanese made margins of 1%. So it's a little bit different on that. So coming to your question, I think that there is still a old state of that's been a little bit overdue, but must be through the force of the new enterprise coming to a less regulated market on that. But when you talk of regulation, I live part of the year in France, and the last one that I was taught in France last week was I tried to put the water on the showers over 40 degrees. And there is a regulation by the government that you could not go over 40 degrees. So when you're talking regulation, it's not a privilege for Brazil or for Latin America.
Well, let's ask Seth about Africa then. I know that a number of companies that I work for are put off by the fact that they cannot have, say, majority control in some countries in Africa. Is that something that you think will change, or is that just the fact that you feel you need a local partner in Africa and that's the way it's dealt with?
No, I think, well, when we invest not just in Africa, we invest in the Pacific Alliance in Latin America as well as Southeast Asia, Turkey and South Asia. Now, I find Africa is less regulated from that perspective compared to many of the other markets from that perspective. And then the regulation is there for a couple of reasons. One is, of course, there is a need to move gradually to where they are starting from. The concern is flooding the market by deregulating too quickly. So there is that concern from the government from that perspective. And secondly is that a lot of this, some of these industries, you do need local partners to work with. It's not easy to work without the local partners. You may not have a regulation per se saying that there's a restriction, but when you go to get an approval, you'll find all sorts of hurdles to overcome, right? So that's the point I made earlier on, is the lack of information from the perspective. But if I was to just go back to your earlier question on Latin America, I mean, we are not in Brazil, but we are in the Pacific Alliance, Mexico, Colombia, Peru, and Chile. The early 2000, mid-2000, we started seeing quite a number of M&A activity between Colombian businesses and Central American businesses, and likewise Peruvians and the others. So we recognized that in due time, Mexico, Colombia, Peru, and Chile will form an alliance. It wasn't an alliance 5 years ago. So we set up our team to map that market. And we said, let's leave Brazil, not to be in Brazil, but the rest of the Spanish-speaking countries. Today, Pacific Alliance is as large as Brazil, growing two times faster than Brazil, and get the diversifications that you need as an investor. And a deregulation in Mexico that started with the new government is unbelievable. That's unlocking.
Colombia also.
And Colombia. So there is opportunities in these markets. It's just timing and having people on the ground for the right information.
Yes. And a good point of that, Seth was telling, is that in case of Brazil, there is different from, there is not a specification which company is national or international. All the companies are Brazilian companies. So there is no more restriction as it used to be on the BNDES, on financing, and so on. Now, as long as you establish there, you are a Brazilian company. That's almost what Colombia made. Now Colombia goes on a very large direction of taking the small things up one by one where they are over-regulating. I think that this will come.
We haven't got long to go, Andrew, but I do want to ask you one question, which Patrick mentioned Alibaba and the fact that obviously it's a very largest IPO for some time. The CEO of Alibaba made the comment about he does not accept Anglo-Saxon type documentation. Everything must be made more simple, which obviously, even as a practitioner, I understand that. But do you think there will be a change in the way in which the Anglo-Saxon style documentation will be replaced by something else as a result of pressure from Asia or other jurisdictions?
I can only answer, I mean, you're the lawyer, so, but I can only answer that from a commercial point of view. I think, Alibaba may well have the heft to dictate to some extent what types of documents might be used in its transactions. That I could imagine. But I don't think that necessarily means that there's going to be a kind of emergence of a different and parallel way of executing and documenting transactions, if we're talking about M&A transactions. I think that one of the reasons why a certain set of standards and norms have arisen over the years, and it may be that the Anglo-Saxon language approach may be dominant in that, is simply that it is the most efficient and most appropriate way to document these things. And it so happens that English has become the international global language, and so that's dominated. But I think what we will see maybe is the need to incorporate in those best practices and styles perhaps some characteristics that arise because of the participation of large Chinese players in the global M&A market. So, I'm sure in the same way that as the United States rose and challenged the previous power of Britain and influenced the way that things were done in international trade, the same will happen with China, and the same will apply to M&A documents. But no, I don't think we'll see sort of the Chinese version and the Anglo-Saxon version. I hope not. It's already complicated enough as it is.
Maybe there's an African version too.
Yes. Well, can I just thank the panel, Andrew, Zev, and Mario, and thank you very much, everyone.
Thank you.